Hi everyone, welcome ladies and gentlemen to Crypto Miners Twitter Space. My name is Mary and I will be your host today. We will wait a little bit to see that everyone is joining, and I would like to have... Oh, Julian, you're here. Great.
Hello. Hello, guys. Thanks for having me.
Hi, nice to meet you, Julian.
Nice to meet you.
So today we have the honor to have a guest from Curve Finance, and we have Mr. Julian Butterloop. I hope I pronounced your name
Yeah,
correctly, sir.
yeah, that's good. That's good.
Perfect. Yeah, welcome, Julian. Lovely
Thank
to
you.
have you here.
Thank you. Thank you for having me. Great.
Can you hear me well? Am I
Yeah,
audible?
I can hear you well. Yeah, perfect.
That's great. So why don't we start right away? We are recording already, so maybe you can tell us a little bit about yourself first. Who are you, and when did you join cryptos, and why, maybe?
Yeah, sure. So sorry if you hear some noise in the background. I'm actually in the street. But yeah, so my name is Julian Boutoulou. My background, it's mathematics and physics, and then I moved into computer science and programming in a few different companies. I work for security defense, and then other company I built my own consulting company specialized in machine learning and those type of like quantitative analysis in the trading side, for example. I got involved in crypto or blockchain, I would say, quite early. Not because I was necessarily looking for blockchain or understood blockchain. It's just because I would say that I felt into the space on a random case. I was playing uh, some um, some games back then. I was also running some computers, computational power for like algorithm, like for example, exploring, discovering space in the universe, the type of things that you could do to give your power to some European Space Agency, for example, for free. And then back then there was also those type of algorithmic like software that you could run and you could test each other who had the best score. And that's what we did. And in the, I would say like late 2010, beginning of 2011, it was Bitcoin. So then I got involved in Mt. Gox and all those different things. And then Ethereum in the early days. So yeah, that's how I got involved in crypto, and that's it. And now
Very nice.
I'm a founder of a few different projects. So StakeDAO, it's an asset management for retail. So we provide the best solution to manage your crypto. We, for example, released a few different technologies such as the liquid locus protocol. But also more recently, the team has been doing a fantastic job. We released something a bright market called bookmaker. Uh, so yeah, this is the one, and then we have Blackpool. Blackpool is a hedge fund for the NFT market. We are the leader in the space. We, for example, have the biggest portfolio in so rare. We manage a few different. We have a few different managers that use NFTs to provide yield. Then we have Rake News. Rake News is the underlying, not underlying, but underground dark side space, like writers or investigative firm where we analyze all the things that are happening in the space of blockchain and more generally also what we are trying to build as a community. For example, we released yesterday, 2 days ago, the SBF FTX piece, and also we provide some videos about the different things that are happening in the space. And then Stake Capital. Stake Capital is an investment family office that is investing in the space quite heavily. And also we have a front desk that is taking some arbitrage or liquidation type of things in the ecosystem of crypto.
Oh, that's a lot. So all these projects that you now told us about, are those also
So those projects are the
partners
ones that I
with
founded myself.
Curve?
And then I was the
Oh,
first
okay.
guy to join Curve Finance. So Curve is a project that was created by Michael Argov, and then I joined. I'm the only advisor of the project, plus also one of the three investors, and also a core member of Curve as I joined the second guy joined Curve project. So I've been helping in a few different aspects of the project, in the integrations, different type of cross-chain applications, also on the legal side and financial.
All right, that's good. Yeah, you have lots of knowledge and lots of experience, it seems, in blockchain. If you entered already 2010 when it all started. Uh, that's great. So could you maybe also just tell us briefly about this project Curve? What is it and what kind of like maybe problem it's solving in this crypto space?
Yeah, sure. So Curve is originally and still now massively. Um, it was built. It's a project that was built for stablecoins. So I would say, like, if you take a look at the like traditional finance, like the FX market or fiat to money to money. So Curve was built and is built. It's an auto market maker. So in traditional finance, you can exchange, for example, US dollar for yen or euro for US dollars, and then you will go to a space such as Revolut or Postmanwise or any software like that, and you will try to exchange some money, and then the system will give you a quote for the money you're changing. But behind the scene, what happens is like you have market makers, so you have marketplaces or people or hedge fund or any type of activities like that that are trying to offer the best quote for you, for the thing that you're trying to exchange. And you have a rate, and they either take a spread or they and then charge a fee on the quote that they're giving you. Well, Curve is an auto market maker, so we automate the entire process of exchanging assets, and particularly for stablecoins. So we use mathematics, and that are placed into a smart contract, and those mathematics give you they maintain the peg inside the pool of all the different assets. So, for example, if you have a pool of three different types of US dollars, USD, T, DAI, and USDC, then the pool will always try to incentivize people to rebalance the pool in order for the pool to be always to one. So you want those assets to always be close to each other, because then when you change asset, you have the minimum slippage and also the minimum spread. So Curve is built with the best algorithm in place on the market to conquer the market of stablecoin. That's what we did best in the early days of the project. And now Curve, more recent, like last year, released the crypto pools. So now you can also swap between different assets. But more importantly, Curve. Oh, give me a sec. Sorry. So then more importantly, why Curve had this massive success is because it's built on there's a massive aspect of the tokenomics. So the you have what we call the curve walls, and what's happening is like when you are providing value to the protocol, for example, providing liquidity or doing some market making or like any type of value on the curve, then you can own a percentage of the token, which is the CRV token. And this token gives you access to a lobbying or voting power that you can then redirect the inflation of the protocol, for example, the CRV, but also redirect the profits of the earnings of Curve protocol among all the people that are providing value. So what's happening is like outside of Curve, you have people such as projects, for example, StakeDAO, that are trying to accumulate as much as possible CRV token, because we know that by owning CRV token, we can redirect inflation in different pools of the protocol because Curve has many different pools. They can be crypto pools or they can be USD stablecoin pools, any type of pools where protocol, the auto market maker need to maintain the peg. And then you have people providing liquidity, they receive CRV token. And then the earnings of the protocol in each of those different pools, because when you do auto market maker, you take a percentage, like a bit. Then we redistribute those earnings into people that are staking CRV token. So for example, stake down, we have, I think, approximately 30 million CRV token. And this is allowing us to vote for the strategy that we want for the pool to receive the best inflation of CRV. And also we can, and so then that's how we can bring high APY into the protocol. I'm not sure if I'm making myself clear, but yeah.
Yeah, it's really, really good explanation. So I can use it's a swap. I can use it to swap one stable coin to another stable coin. That's even more simpler to say, right?
Exactly. You can swap assets. Yeah, sorry. I'm not sure what's the audience, if it's technical audience or more like a.
I think it's a mix. So yeah,
Okay, it's a mix.
we'll
Okay.
have.
Well, yeah. If I want to make it simple, it's a place where you can swap your asset at the best rate possible on the entire market, among centralized exchanges, but also decentralized financial products.
And you said also now, since a year or something, you can also swap other tokens,
Correct.
not only
We
stablecoins,
can,
right? So
yeah, we have
so which ones?
example, a tree pool. You can swap between ETH, BTC, and US dollars.
That's good. So as far as I understand, this is a place for people who, I mean, because it's fairly complicated, we can I think we can agree on that to buy crypto today at least for beginners, and there are lots of coins to choose from, and it's also sometimes complicated because you have to move to different places to get what you want, and here you can have all the stable coins in one place and swap them against each other, and that's, I think it's one of the good features of this, or am I right?
Sorry, say again?
Well, it's a good place where you can swap all the stable coins, so you don't have to
Yeah,
move between different
stablecoins, but
swaps.
also any tokens that are supported by the platform, as long as you have enough liquidity inside the pool. I would say that Curve at the moment is the best place for doing those swaps because you have uh, minimum slippage and almost zero spread, so it's perfect. If the pool is well, you have enough liquidity inside, then it should be fine.
And also, it's fair to say
Because
you are one.
if I want to, sorry, I cut you. Sorry, I'm not that.
No,
But if I
go
want to
ahead.
explain, like, it's the best place for swapping assets, and the reason for that is because we incentivize, mathematically speaking, we incentivize people to rebalance the pool, and this is very important. That's the reason why it's the best place for swapping those assets, because people get paid to rebalance the pool. I mean, to not rebalance, but to have the perfect peg on the pool.
And it's not a centralized exchange or anything, because
No, fully
you
decentralized.
you connect your wallet to this swap, and then you swap, and then you take it back to your wallet, right? It's not
Correct.
nobody
It's
else
so
involved.
in one side you have centralized exchanges where you don't really know what's happening behind the scene, and you have to trust the person operating the centralized exchange. And we've seen like for example FTX and
Yeah,
other
especially
platforms,
now. Yeah.
Celsius, Three Arrow Capital, and all this thing, that it's easy to lose your capital. Well, here you have to trust the mathematics that are inside the smart contract. Curve is a fully decentralized protocol, meaning that no one has control over it except people that can make voting decisions. But you have a specific time log for that. I mean, amount of weeks or days that you can change the protocol or add new things to the protocol. but all whoever provides value to the protocol gets distributed, rewarded. So meaning like all the profits, and I want to be clear on that, all the profits that Curve Finance is making is redistributed. 100% of all the profit are being distributed back to the people, who are providing liquidity or staking the CRV token back to the platform. So Curve protocol or Curve company or us building the protocol, the Curve team, we don't get a single penny from the profits of the protocol, which is very different from the centralized exchanges. Because centralized exchanges such as FTX, Binance, or other platform, all the profits that the platform is making, they redistribute back to themselves, back to the owner of the platform.
So when you hold this token, CRV token, the Curve token, you have to stake it, right? And then you get rewards.
Exactly. When you stake the CRV token, you get all the rewards from the protocol. Of course, it depends on how many CRV token you have, proportionally to all the people that are staking, because you have on a weekly basis, for example, like per week, you can have between 500,000 up to 3 or 5 million US dollars of profits or rewards that are being made from operating this auto market maker, and they will distribute it back to the people that are staking the CRV.
Yeah. And I mean, it's not a small project and it's not a new project. You have been around since, I don't know, when did you launch? 2020?
It was 3 years ago, 2 years and a half ago. Yeah, almost like beginning of next year will be like we're going for the 3 years. Yeah, obviously it's I would say that Curve. I mean, because I'm a little bit biased, but I would say that Curve is the biggest DeFi project. You could argue that Uniswap is also pretty big, but Uniswap has nowhere. They don't redistribute profits or earnings or rewards to users, so it's completely different. Uniswap is a mix. For me, I see Uniswap being the biggest hybrid from centralized exchanges and decentralized exchanges, because the earnings are distributed back to the people that operate the protocol. So they don't actually charge something. So you own the token and that's it. But then you have a limited company that is making profits, and then you have the protocol, the people providing value to the protocol. They don't actually earn anything. And plus, people providing liquidity to Uniswap, by order of magnitude, is more likely that they will lose capital over time than actually not depositing inside, because statistics are showing that more than 80% of people depositing in Uniswap are losing capital at the moment. So yeah, it's very different.
Yeah. And you are also among the top 100 coins. I think you are 80 something.
Yeah, this is not something that I particularly take attention to myself, look into.
No.
But yeah, I think
everyone can check it out themselves.
Yeah, exactly. I'm not really into the
No. And you said something about automatic market maker. Can you explain that further?
Auto
what
market
does it
maker?
Really mean? Auto market maker.
Yeah. So if you want to take it like from a high level understanding, market making. From traditional finance, so like in society, market making is the activity or the action of providing an asset on both sides. So, for example, euro dollar, a market maker will provide euro and dollars for people to be able to exchange. And normally, if the market is healthy and well market make, then you will be able to exchange the US dollars to euro and vice versa at the minimum spread. So if the FX quote on the market for euro at the moment is 1.1 US dollars, then you should be able to exchange at 1.1 US dollars. In a non-LC market where you don't have market maker, then you will, for example, if you exchange 1,000 euros and you should get $1,800. Well, in an LC market, you will not get this money. You will get way less. That's when the market is not well operated by market makers. So this is how market works. It's like you go, and it works in everything. If you buy something in exchange of something, then you want the market to be well equilibrated, because then you don't want to get penalized by the spread. Well, then comes in DeFi, in smart contracts, I mean, in the blockchain, because it's a fully decentralized, it's a decentralization. Then we have auto market maker, meaning that we remove the market makers. We remove the people that are doing this job. And what happens is in auto market maker is the smart contract doing the rebalancement of the pool, making sure the pool is well stabilized with equilibrium of those assets inside the pool. So you don't need market makers. What you need is people providing liquidity. And then inside the pool, every time that someone add liquidity or remove liquidity, meaning swapping assets, then the pool will always try to rebalance himself. And what happens is, like, if you provide an asset that is under represented inside the pool, then you are paid by what we call a positive slippage. If you remove an asset that if you add an asset that is already over represented inside the pool, then you get penalized. And that's how you incentivize people to balance the pool. Then I said before that you have market maker, but on top, because those people, like for example, Stake Capital or other people, what they do, they take action on a positive slippage. When they see an arbitrage opportunity, meaning when they see that they can make money because providing an asset inside the pool that is underrepresented, then you get paid. And you can actually get paid a lot. You can get paid up to 2 or 3%. So imagine you make 2 or 3% in 12 seconds on an asset that is stable. Normally 2 or 3% APY, we're talking per year, but here we're talking per 12 seconds. So imagine on a scale of 1 year, how much is this type of percentage? That's why at the moment, for example, project like Curve are the most sophisticated, but also the most useful project in order for people to exchange assets, because you don't need people to rebalance the pool. You have something that is mathematically driven for providing this value back to people.
All right, that's good. So let's talk a little bit about the team behind this project, or it's a company. So there must be lots of people working with this, right? Do you know exactly how many, or how many are you in the core team?
The amount of people it's confidential. I would say it's a small team compared to what we've seen in the space. It's a small team of very strong people, I would say. But we've been here for we probably, as I mentioned, one of the major projects in the space, provided huge amount of value, and still there standing and building and shipping amazing products. Yeah. So very different from other players in the space.
So do you also have like do you help people when they get stuck or when some problems happen? You have like
a lot.
a board for that.
If you go to the Telegram group, and also we have a forum, we have documentation, everything that happened, we have amazing Curve support, customer service, where we try to analyze and identify anything that went wrong in those different activities. But yeah, we are pretty strong on the support side.
Mm-hmm. So how many of the core team are doxed? Everyone, or a few maybe?
Yeah, well, I mean, answering this question will make the amount of people inside. I would say that myself, Michael, and maybe a few other people are public figures. Then the rest of those people are operating in a more anonymous aspect. But again, I want to the person who's the most prominent figure. I mean, the CEO of the company, Michael, is public figure. So this is not an anon project. This is a public project where all the account, if someone needs to be put in as accountable, then Michael is there. So it's a public project run by amazing amount of people, and some of them for security reasons are being anon. But that's it. But the project is public.
Okay, that's good. And it's also run by a DAO, you said.
Yeah, fully DAO. So I think it's probably I mean, I'm also biased on this, but I want to be challenged. But I think this is the most decentralized project in the sense that in order to make a decision on the project, you need the token, and this cannot be done otherwise.
And is it percentual? I mean, like if you have like more token than another person, you have more votes.
Yeah,
Or how
correct.
does it
Yeah.
work? Yeah, okay.
No.
That's
It's
kind
not
of
true.
normal, I guess.
It's not true.
Not true?
It's not true because that's what we call it's a linear voting power, meaning that you can maximize your vote by locking to 4 years. So 4 years is the maximum. But look, if you have one token that you lock for 1 year, you get one voting power. But if you have one token and you vote for 2 years, which is half of four, you get only 0.5, so half of voting power. So meaning that you can have imagine someone that has four CRV token, vote for 1 year, he will get he will get one CRV, one VCRV token, which is the opposite of what someone. Uh, so basically, you get 4 times less if you lock for 4 times lower. So it's not a matter of how many CRV tokens you have; it's a matter of for how long you lock.
Okay, so is there a minimum or a maximum hold of the CRV
No, the
token
maximum you
per
can
wallet?
vote. No, there's no maximum. It's you can vote as many tokens as you want, but the maximum length of voting is 4 years. But you can always, so if you vote for 4 years, tomorrow you can reload for 1 day, for one more day. You know, like you can always. The point is like the gauge of voting power you can get is a maximum 4 years, but that's it.
Okay, so I can lock my tokens for 4 years.
Yeah, correct. You can lock up to
Okay.
4 years, and then the next day you can relock, but if you do it, because Curve is quite complex, it's really complex because Curve is a protocol. Curve is not intended for people on retail side. It's not as easy as using a centralized exchange or using, for example, StakeDAO. That's what we've built StakeDAO. StakeDAO is to, for example, liquid lockers made by StakeDAO. They are providing a solution that is so simple. I mean, so simple that is easy for people to be able to manage their asset on their wallet. And we automate all those concepts of relocking and all this stuff. We do it for you. You just have to deposit your token in smart contract, and then the DAO will maximize the return for you, the rewards.
Okay. So could you give an example of something that the DAO recently have voted or changed by vote?
Yeah, we change on, pretty often. For example, weekly basis, we change the parameters associated to those pools because each of those pools they contain different type of assets. So you need to change those parameters on quite often. This is type of thing that DAO does. And also, like for example, if you add we had a Luna or Terra or those type of assets that were quite dangerous because the project was dangerous. So we had to not remove, but shut down the pool that were playing with those type of assets. So we had to take
Oh,
decisions.
did you do
But
that before or after the Luna crash?
we did that when it was crashing. Yeah,
Okay.
but some other pool, because we saw those assets, then we had to stop some other pool from entering from some other asset that we thought they were doing kind of the similar mechanism. So we had to remove them from. I mean, they were trying to apply for being listed inside the protocol, and we had to say no.
Okay. So in this DAO, you vote and you can change stuff, but what is how can I say this? Sorry, my English is not always
Your
perfect.
English is very good.
I can't find the words. That's what I mean. So I'm trying to comprehend the DAO system here. The more tokens you have, and the longer you lock them,
Yeah.
you get less votes. So
No,
if
no,
I
no. You
only
get
lock
more
them for
vote.
1 year,
You get more vote. The longer you vote, you lock your token. The longer the bigger
yeah,
vote you
that's
get.
makes more sense. Yeah,
Yeah.
okay, I misunderstood that. Good. Okay, we
My
cleared that
point
out.
is not because someone will have, for example, if you have 4 times more token than someone, but you lock for 4 times less, you will get the same amount of voting power. That's what I meant.
Okay. Yeah, per year then you mean,
I mean, per like
per wallet.
for the how long you vote, you know. So yeah.
So do you have some mechanism to provide that only good people vote, that no one can come and like buy lots of tokens and try and vote against
Sorry, say
what you
again.
really want? I mean, I think with DAO, it's a
Yeah,
really good to have a DAO, but it must also be very difficult sometimes. I mean,
it is.
because you
It
don't
is.
know who
It's
is behind
yeah, exactly. That's the
behind the
reason why we
wallets, who
built.
is voting,
Yeah, that's why
why
we
they
release.
vote.
Yeah, that's what we built Stoic DAO for. It's like we want to have a good portions of the curve tokens. For now, we have 30 million approximately. But the idea is to have projects like StakeDAO, Alchemy, Frax, and other projects that can help us make the best decision for the protocol that we're building. Who are the best
So who?
positioned than the people inside the core team to build the future of the protocol? So that's
Yeah.
what we do. We accumulate the governance power, and then we make those votes. For example, we have built a Bribe platform, and this Bribe platform on Liquid Locus on the StakeDAO can provide us different type of tools for people. So people can, what we want is people to keep their rewards, keep their token, and also benefit from the voting power associated to the token. And that's what we built. And then they can decide they want to delegate the voting power, delegate the curve tokens, and all different things. So they are free to do whatever they want. And that's why it's very important that why would you go to a centralized exchange such as Binance and other things if outside those platforms in DeFi, if you use some very simple application, you can benefit from all the different angles, and all the value you provide to these projects are distributed back to you. It's a no-brainer.
Mhm.
But
Yeah,
of
yeah,
course, it's
that is a
complicated because
no-brainer. I
I mean
agree.
it's a no-brainer in the sense, of course, it's
But how?
complicated. That we're still building for best user experience and best UI, but we're getting there.
Yeah. Yeah, I understand that the core team wants the best for the project and so, but how can, if I hold, like, let's say a few tokens and I have a vote, can I also put forward some suggestions, and how do I do
Of
that?
course, we have a program, we have a forum, we have a place for making people vote, so you can decide. Every vote that we do, they go from a proposal period. So a signaling period. So for example, you propose something on the forum, and if you have a lot of people that vote, and then we create a proposal, and then we vote for the proposal. So anyone can start challenge anything, anyone can vote for any ideas, and can also suggest ideas that we should implement.
So anyone can start a little campaign about what they want to change and try to get people on board. And then if it's enough people, you from the
Correct.
core team, you see this and you think, okay, let's have a vote
Correct.
about this. Okay, that's
Correct.
good. Really good. Um,
Yeah.
okay, so I was trying to read your white paper, and that was a little bit too complicated for my brain because it was lots of mathematics and things.
Hmm.
But I saw also that you had two other white papers listed on your
Hmm.
webpage, but I
Hmm.
couldn't open them. Is
Do
Are
they?
those
Okay.
something that are coming, or is there something wrong with
Yeah,
them?
we have we have the first white paper, which was the essence of Curve protocol. Then we have the
Mm-hmm.
second one that Michael released, which was the crypto pool, so tree pool, a concept of being able to exchange between different type of assets that are not necessarily correlated to stablecoins. And then the third one that is coming is the stablecoin paper. So before we were doing auto market maker on stablecoins, and now we create our own stablecoin that we believe will be way different from all the stablecoins that we've seen so far, from like being controlled by central authority, some stablecoin being completely Ponzi scheme, or other stablecoin being super weak on censorship. So this one is a combination of all the things that we learned in the space, plus additional features that will help this stablecoin to be, I believe, one of the most prominent stablecoin in the ecosystem based
Okay.
on
So
mathematics.
there seem to be lots of stable coins, and it has been like lots of controversials with the depegging and things like that.
Yeah.
So how will that affect your swap if some of the now current stable coins are depegging? How will that affect you or this project? Or how did it
Uh,
affect when Luna? I mean, I guess you had the
the
Luna
problem,
stablecoin.
for example, Luna,
Mm-hmm.
we like it or not, Luna was and always been, and still now, is built on the concept of a Ponzi. So basically, in order to repeg, in order to maintain the peg of the pool of the asset, the project is distributing the Luna token. So in this thing, it's not based on mathematics. It's like, please believe us. If you stay in the pool, you receive more tokens of the Luna token. It's not based on. It's just based on the promise of receiving a token that has value, so people should stay inside. This is exactly the same definition as a Ponzi. In a Ponzi, you receive an asset in order for the future to sell it to someone that will be able to buy it. So this is complete crap. What we need in a space, for example, projects such as Frax or Ngo. Ngo is built on derivatives, it's built on futures, so financial concept, traditional financial concept. Well, here in Curve, what we believe is we can use the auto market maker of Curve, the huge amount of liquidity that we have above 12 billion US dollars, in order to build something that is mathematically bulletproof, that is mathematically driven, and not on the promise of receiving a specific token if you stay in the pool. Those are just not what we're building in the curve thing. It's a fully algorithmic stablecoin that is based on mathematics and not human greediness or weakness.
Okay, so no human errors are possible then if
No human heroes. No. I
okay.
mean, no human heroes is like it depends on the contracts and etc. have been audited multiple times, but the error could come from the smart contract level, but definitely not on. Oh, okay, wait, we'll be telling the APY on the inflation of this. Okay, let's get into 80% APY in the stablecoin to drive mass user adoption. So all this crap. This is not good. This is not good. It might, for some people, it might be good short term because they earn a lot of money or whatever. But the thing is, like, it's definitely against the value of the ecosystem, and then it fragilizes the future of whatever we're trying to build. And this is the reason why we are here today in a major bear market, because we had some greediness people, some people that are not respecting the value of this ecosystem, that are trying to build things driven by Ponzi and whatever type of other criminal activities in order for them to get rich quick.
And you also mentioned that you now are trying to build your own stablecoin. Or does the market need another stablecoin, you think?
I believe. Well,
Why?
look at everything. Well, the thing is, like, at the moment, if you look at everything, all the stablecoin that you've seen, they all dead. Like, we have USDC or USDT that are fully controlled, fully censored. I mean, it can be censored from day to another day, and they're not they're fully centralized by the company that delivered the stablecoin. So one day to another, they can decide over the weekend, or we want to stop all the people that had access to the stablecoin in their wallet. We want to stop them.
Yeah, I've heard that some are also not like transparent with their funds or what they are like having to back it up, you know. So how are you gonna be better than the
Well,
others? You
that's the
said
thing. That's
yours
the
is
thing.
gonna be
There's, as I mentioned before,
much
they
better.
are and there is and will never be any outside human activity. This stablecoin is purely based on a smart contract. So everyone can audit the code, can see in real time the amount of money that is inside, and can see in real time the minting process. There is no decision from human decisions in the sense that from a hidden book or something that someone can make a decision without letting without the world to see what's going on inside. That's a very different approach. It's a fully decentralized product in the sense that anything can be captured from the contract by reading. You don't need like a legal authority. You don't need like someone to ask the information.
Okay, so I get some questions here from the audience to me, and someone or a few people are asking about the Curve got hacked in August, or the web page got hacked. I'm not really sure which one, but they want to know also what have you Curve or the team learned from that, and how are you doing the security aspect of
No,
this?
it's always the same. It's always the same. Curve, Curve product, Curve smart contract never got hacked. What got hacked and what affected Curve, this is very different. The DNS provider, so the provider, like for example, Namecheap and OVH and all these different providers, the one that are providing the way of communicating between different, if I want to stay like very high level without getting into the technical thing, you register yourself for a website. You create a new project and you want to create a website from your project. So where you go to buy a domain name. So here, the one that got hacked is a provider of the domain name. That has nothing to do with Curve, not associated to Curve. Curve
Okay.
got a domain name, and this provider, someone in the United States, had access to an internet router and was managed to hack this.
Oops, what happened?
We have noticed. Can you hear me?
We lost you there, Julian, a little bit.
Sorry. Someone, so the domain provider, the one that is providing the access to the website, managed to hack. So someone hacked the domain name provider, and managed to inject, because obviously Curve goes to the provider. And this is how we all communicate in this web 2, you know. So then someone inject malicious piece of wallet inside the front end. By the time we were aware of this manipulation, that has nothing to do with Curve contract, nothing to do with Curve website code. Then it took us 1 hour to notice the infiltration, not on our side, but on the domain provider. How could we be aware that someone will be able to hack the domain provider? So the question that you asked, it's a good question. Now, what it taught us that every single point of communication in the entire process of having access to a website, we need to be 100% aware that this middleman that is not actually using blockchain or smart contract can be hacked. And this is what happened. So now we're taking action. What you could do, you could also check the hash on the website. You can check that the website is always providing, always serving the content that you built for. And this is something that we taught us. It's like, don't trust anyone. Always verify the information that you are having access to. And this is a massive lesson that we learned. And it happened to Benko, it happened to other guys. It's like, to the process of providing information to people using website and internet, you have to be 100% sure the information you're serving. So you have to be always verifying the information. Web 2 is very weak, and this we taught us a huge lesson.
All right. So
I will need a couple of minutes left.
Okay, let's hear something about the future of Curve.
Sure.
Where do you see Curve in like 2 to 5 years?
Well, the goal of Curve has always been very clear. It's tap into the market of, for example, FX market, where we're doing FX does 6 trillion, 5 or 6 trillion US dollars volume per day. DeFi, we do a couple of billions. For example, in Curve, you can sometimes see between 1 and 3 billion. Yesterday, we did 2 billion US dollars volume. Well, the idea is to capture 1%, between 1 and 10% of the FX market or whatever, all transaction in the world. So instead of having a TVL of 10 billion, we want to have a TVL of, I don't know, like 100, 500, 1 trillion US dollars. And instead of doing volume between 500 million and 3 billion, then it will be between 10 and 100 billion volume per day. That's the first things about Curve. And then secondly, it's to be one of the major stablecoin provider in the ecosystem, purely based on mathematics, so algorithmic based stablecoin is also the place.
So how do you actually fund if you wanted to develop more and have devs and others develop this project? How do you fund it? Do you take from the fees when people
No,
swap
we
their tokens, or?
the project is mostly for. There was like a round of funding in the early days, myself and few other people, like very small group of business angels. This is how we finance. But also the project is self-financed, and we also take from the treasuries. So we have an allocation of Curve token that we can give as grant to people for providing services. But it's also like the product is very unlimited company and self-funded. We don't take profit from the earnings of Curve, if that's the question. As I mentioned, all the earnings and all the profits of Curve are distributed back to people that are using the project.
Yeah, but you have to have like a salary for the core team
Yeah,
and for maybe the
we raise
admins and.
capital and we have an allocation of Curve personal. So this is how we finance the project.
Okay, cool, very good. And you have somewhere else to be soon, you said, Julian.
Yeah, that's good now. Yeah.
So how many minutes do we still have with you?
1 or 2.
One or two?
Yeah, I have the
Okay.
train. I have the train,
So,
so this
okay.
is not something I can stop. I wish
No,
I
it's all
could
right.
stop it.
So yeah, it was a pleasure talking with you, and really nice to get to know this project that I didn't know about before, actually. So I'm really happy for that. I'm gonna look
Yeah,
it
I'm
up
always
and learn
available.
how
If
to use it.
you can follow me on Twitter, ask me questions. I'll be
Oh
more
yeah,
happy
that's
to
a good.
answer. I wish I was really clear on the different like features of Curve and how Curve works, and also that give you more confidence about using DeFi more often, and try to protect yourself from centralized authorities such as centralized exchange like Binance and FTX and all the different guys.
Yeah. Yeah, it's actually good to have a good DeFi project that has been around for a while. And
Exactly.
yeah, you did an amazing work to describe it for us and tell us more about it. And I think we have lots of questions, but we can't answer them all because Julian also has to go now. But
Yeah,
maybe you can come back, Julian, and
of
talk
course. You
with
can
us another
always come
time.
back.
That would be lovely. Yeah.
Well, they can also ask me on
And
I'm sure, like on the feed where you add the Twitter uh, Emma, Ene.
oh yeah, here.
People,
Yeah,
you
yeah.
can ask question on below the tweet, and I will try to do my best to answer them.
Yeah, that's really kind of you. And also people can go to your Telegram site and ask because there you have admins working, right?
Yeah, definitely. Yeah, they can go to
Mm.
tweet Curve Telegram and ask question there. 100%.
Very good. So do you have time for some final words for us, Julian, or do you have to run?
Sure, sure. You want me to give you
So
the final word about what Curve or?
yeah, just a closing statement. It was lovely to have you here, and I wish you the best of luck in the future
Yeah, thank you
with the
for.
bear market and everything.
Yeah, thank you for having me. I wish, as I mentioned, I made myself clear about the project of Curve, the auto market maker, and why and how this project is providing value back to people in this space, and also how you can benefit from using the product. So, as I mentioned before, Curve is made in a decentralized way, fully automated on a smart contract level, and all the rewards that Curve is making, we're talking about a couple of millions per week, is being distributed back to the people. So it's a clear factor differentiation from the ecosystem, from like outside, and this is how we try to serve the people with the best project possible. The project has been there for a very long time. There's some very well-known people inside the project, and the project is being integrated with all the major DeFi projects in the space.
Mm, very good, thank you. I do have one last question. It's a very quick one. Do you eat pizza with or without pineapple, Julian?
No, never pineapple. I hate it. I hate the mix between
Okay.
salty and salt and sugar. This is the worst for me.
Okay.
Like for example, the worst
Well,
pizza I
thank.
think that should be it's a criminal activity should be the Hawaiian pizza. For me, it's I don't understand how people can eat this pizza.
It's criminal activity to eat pineapple pizza. Okay. Don't start a war here.